Good day, everyone. Welcome to today's session on transfer pricing for intragroup services. As we know, transfer pricing plays a critical role in managing tax and financial risk for multinational enterprises. Intragroup services are those provided by one entity within a group to another, and this poses unique challenges, particularly in determining the correct pricing that adheres to the arm's length principle. So today we will focus on the intricacies of pricing these services, documentation, compliance requirements, and best practices to follow. So we were looking at Module 20, transfer pricing for intragroup services. So we'll start with pricing for intragroup services. Let's begin with the fundamentals of pricing intragroup services. Now, intergroup services refer to any management, administrative, technical, or financial services provided within a multinational enterprise group. Since these transactions occur between related entities, there is always the risk that pricing may not reflect what independent entities would have agreed upon under similar circumstances. Therefore, the arm's length principle becomes crucial here. Now, we must ensure that the terms, conditions, and especially the pricing are consistent with what independent parties would have charged. So let us look at key consideration in pricing for transfer pricing in pricing for intragroup services. One is nature of services. The first step is to identify the exact nature of the services provided. Are they administrative, technical, financial, or perhaps specialized like research and development or marketing? This is essential in determining their value to the recipient. It is critical to specify the nature of the services rendered. For example, is it IT support or strategic planning? Now, services can generally be classified as either routine, such as clerical work, or specialized, such as research and development. This categorization affects the pricing approach and helps justify any markup added to the cost. Number two, cost allocation. Next, we move to cost allocation. The cost of providing these services must include both direct and indirect costs. Direct costs may include salaries, while indirect costs could cover utilities or office rent. Now, these costs should then be allocated across the group entities based on the benefits they derive from the service. So, for instance, an administrative support service could be split among various subsidiaries depending on the value each derives. Number three is markup on cost. To comply with the arm's length principle, a markup is often applied to the cost. The level of markup depends on the nature of the service. Routine services such as administrative work often justify a lower markup. On the other hand, specialized services like financial advisory or research and development may require a higher markup to reflect their value. For instance, routine clerical work may have little to no markup, but for legal services, a higher percentage is applied due to its complexity. Number four, benchmarking. Benchmarking helps ensure that pricing reflects what would have been agreed upon by independent parties. So, comparable transactions, this involves identifying similar transactions between unrelated parties and using them to gauge appropriate pricing for intragroup services. It is also important to use reliable resources or reliable sources, commercial database, industry reports, and Publicly available financial data are key sources used for benchmarking. This helps establish comparable prices to ensure that the pricing aligns with market standards. So now let's look at common transfer pricing methods. Common transfer pricing methods. Now, let's look at the common transfer pricing method used for intragroup services. The methods are essential in determining the arm's length pricing for a wide range of services. 1. Cost plus method. The cost plus method is widely used for routine services. A markup is added to the cost incurred by the service provider. This method is especially suitable for routine, low-value services such as administrative support. Next is the transactional net margin method, which looks at the net profit margin in relation to an appropriate base such as cost or sales. This method is generally used for more complex services such as IT support or specialized research services. 3. Comparable uncontrolled method. The COP method directly compares the price charged for intragroup services with the price charged in comparable transactions between independent parties. It is often the ideal method when reliable market prices are available, allowing for a straightforward comparison. So these are the common transfer pricing method that we've discussed. So let us move to documentation and compliance for intragroup services. This is an area that is absolutely crucial to transfer pricing. Proper documentation provides evidence that the services were rendered, that the costs were accurately allocated, and most importantly, that the prices or the pricing adheres to the arm's length principle. So key documentation requirement now. Number 1, let's look at service agreement. This agreement must clearly specify the nature of services, terms of the transactions, and the pricing arrangement between the entities. Secondly, responsibility and obligations. Each party's responsibility and obligations must be clearly outlined in the agreement to avoid any ambiguity. So number 2 now, functional analysis. Functions, assets, and risk. A functional analysis must identify the functions performed, assets used, and risk assumed by the service provider. This analysis helps justify why certain pricing mechanisms were applied, ensuring consistency with the nature of the services rendered. Number 3, on cost allocation and invoicing. Keep detailed records of costs incurred in providing the services, including both direct and indirect costs. The invoices should reflect the cost as well as any markup applied, ensuring full transparency. Now, number 4, benchmarking studies. Benchmarking studies are essential to justify the markups applied and demonstrate that the pricing is in line with the arm's length principle. Now, comparable transaction. The documentation should include evidence of comparable transactions with independent parties. Now, let's look at compliance with local regulations. Compliance with local regulations. So, ensure that your documentation complies with local transfer pricing rules, which often require preparing a master file, local file, and country-by-country reporting. These are things that we have discussed in on our earlier modules. So you can go back and listen to that to understand it in details. Now let's look at best practices for documentation and compliance. 1 is regular updates. Regularly update your documentation to reflect any changes in services or market conditions. This is very important. Internal audit, we've mentioned this severally in different modules, that you should conduct internal audits or tax health check to ensure compliance with transfer pricing policies. Engage with tax authority. You also need to, regular engagement with tax authorities can help clarify any requirements and ensure compliance. It's also very important. So let's look at some practical example of intragroup services. We'll be looking at case studies. One, this has to do with management service or management services, and in this scenario, we are using ABC Corporation, a multinational company that provides management services such as strategic planning and financial management to its subsidiaries. So, how is this implemented, and how is the documentation done? So, costs associated with management services like salaries and office expenses are identified and allocated. Secondly, a 10% markup is applied using the cost plus method, justified by benchmarking similar services. Detailed documentation, including service agreements and functional analysis, is also maintained by ABC Corporation. Now, the outcome will be with this comprehensive documentation. The comprehensive documentation ensures compliance with transfer pricing regulation and minimize the risk of disputes with tax authority, because the comprehensive documentation ensures compliance with it. Transparency too. Clear and detailed record provide transparency and justification for the intragroup service. So let's look at another case study. Now, the second case study will be on IT support services. So, in this scenario, DEF Limited, an IT company, provides technical support and software development services to its subsidiaries. Now, the implementation is that direct and indirect costs, such as salaries and software licenses, are identified. Now, the TNMM is applied to calculate the appropriate net profit margin. Service agreements, cost records, and benchmarking studies were also maintained. Now, with all this that has been done with respect to implementation, the outcome ensures that pricing reflects industry norms and complies with local regulations. So there is an accurate pricing, and these also comply with the regulatory compliance as a result of comprehensive documentation that support compliance with local and international transfer pricing regulation. Now, for case study 3, research and development services. In this scenario, we're looking at a pharmaceutical company. So GHI Pharmaceutical Company conducts research and development activities and provides these services to its global subsidiaries. Now, how did they implement this? They actually did a cost allocation, such as research and development costs, such as salaries, lab equipment, and facilities are allocated to the benefiting subsidiaries. Now, a higher markup of 20% is applied using the cost plus method. This is justified by benchmarking, and detailed documentation that supports the pricing was also kept. And now the outcome is that the markup is justified by the specialized nature of the research and development services and comprehensive documentation to ensure compliance with regulation. Documentation is very, very key when it comes to transfer pricing. You need to be able to justify it with your benchmarking supporting document or your benchmarking analysis. Now, in conclusion, to wrap up, transfer pricing for intragroup services must always adhere to the transfer pricing for intragroup services must always adhere to the arm's length principle, ensuring that the prices charged reflect what independent entities would agree upon under comparable circumstances. Whether using methods like the cost plus method, TNMM, or COP method, it is essential to have proper documentation and clear cost allocation. So by following these guidelines, companies can ensure compliance, reduce tax risk, and maintain transparency in their intragroup transaction. Thank you for your attention.